Welcome to Trading Lounge and the Australian report for, Friday, May 6th. Okay, so look, it does appear that my original count going to the downside is the one that we need to be looking at. But today we'll just go back over the mistakes that I've made in this little area through here and get back on track. It does appear that, my saving grace with all of this was that this move down through here, as I kept mentioning, was clearly in 5 waves. So it really had to be, we need to get another 5 over here. So I just got a lot of this in here wrong. So apologies about that. But let's just have a look at the intraday moves and how to correct what I've done in here with this. But the takeaway is that we're looking at 1 and 2 and 3 and 4 and 5. How far we come down, I'm not quite sure, but we've got to be down here somewhere at least. And also too, unfortunately, it does appear that the gold market has got a fair bit further to move down as well. So we'll be going back over that today. And Jeffrey Keenan sent me a chart on US iron ore, so we're going to have a look at that and the implications of that in the bigger picture as well. So a bearish scene for most of the markets that we're looking at, unfortunately. So let's just make a start and move in and have a look at all of this. So I'm going to, with this situation here, I need to put this back down here and put this back over here for this, and where we originally had it, the Fed's coming out, making a move on the rates, put a spanner in the works and threw me out a little bit. So that's my fault, not the Fed's. And obviously they're still going to have more rates hikes, as will most countries, I would imagine. I don't think that they can do much about the inflation. They've got to look like they're doing something, but I don't know why they're doing it if it's not going to do anything. I mean, they've been through it with the 80s. I don't really understand. All they have to do is stop printing money, but they can't. They're just saving their own assets, I think. I don't know. I just really don't understand. So this wave 1 and wave 2 needs to go over here, and we'll be looking at a wave 3 and 4 coming down here, which will be part of this thing. We'll see all this play out across these levels here. We can start sort of framing it up with trend lines and so on, and get some sort of, got to start piecing it all together in some way. But it'll be something like this, and this will be coming down here, will be wave 1 and 2 and 3 and 4 and 5 for this third wave and this fourth wave. That will make this, there's a fair bit to go on across here really. So that will be that one and that one and that one and that one. So yeah, the 7,000 is going to create a headache. But if we can get some short trades on down into that, well then I can redeem myself. I don't know how long that wave 4 will play out across here. I expect some while. Rightio, so we need to move into the hourly and then the tick chart. So this is the horrible mistakes that I made yesterday. But you got to have mercy on me. Everybody's doing the best they can, so that's the way I look at it. That sort of keeps me peaceful when other people make mistakes. Anyway, that's we didn't really trade anything, so that's one sort of good thing. So we don't need these over here, so we could use these. So that's the A wave. Oh no, sorry. Because this is quite a nice little 5 waves down here, so that's why I'm sort of using that. And this is the spanner in the works where the Feds came in, so we can just put that there. And we can look at that, and we'll need to take a closer look at that, but that's down here somewhere. totally different direction, isn't it? I've got those over there. I'll just take these. Don't need that. We could use that over here. Already got one. It's okay, that could become the wave 4. Drop it down a notch or two. So 1, 2, 1, 2, and 3 and 4 and so on. I mean, the US markets have got that down here in 5 waves finish, so they're looking for a bit of a rally, but we just need to sort of double check that little bit there. And that's the wave C that was in 5 waves moving up there. And that's also why it caught me out a bit. So yeah, wave 1 with an A and a B and a C, almost an expanded flat. So yeah, that's sort of where we are really. And then this, if that's correct, then we should see, we'll have a look at the US's, and all the US stocks have got this as well, so it's pretty concrete. Will we get back up there is the question. Splitting hairs there, I'll have to look at that on the tick chart. We can turn that green. But we'll just also bring it down a little bit as well. It's 72 there. I will look at the trades on the other page on the tick chart, I think easier. But that's kind of it in a nutshell. We can what's that trend line there? Okay. Can use those over there for wave 4 later. The rest of it we don't need. Not on this chart anyway. Too many objects. But this will come in there, and that's the old count. We didn't get away, we didn't get 5 waves up, we've only got 3 waves up. So that will that's around the 7.2. But anyway, it's just good to be aware of that, you know, because it will create support, but it'll probably show up as group 2 in here, like, anyway, yeah, group 2. So we'll just copy that, put that there as one, and that back to there. And so we're back on track in a way. Okay, now we need to do the trade, so we're going to go to the 100 ticks, I think it was. There's something going on here. So yeah, just keeping things a little bit simple at this point. I've already got 1 and 2 over there, haven't I? 1 and 2 there, so I need to redo that. Okay, so that needs to be wave 1 there. We don't need that. We don't need that. That could be wave 3 and 4. Use these down here. These over here. These down here somewhere. Don't need that one just yet. So we can push this over to here. Doggy's in the background scratching around. So yeah, I don't know if we'll rally that high, but we're gonna have to have plans to take that on board a bit in some other way. I think he's a bit frustrated, he's waiting to go for his walk. Hey Minky, Marcy won't be long, mate. Okay, so I mean that looks like the sort of A wave could be sort of completed there. Now we just really should have a look at the US markets. The Nasdaq is the weaker one. This is the SPX here. So from here we're looking down at 1, 2, 3, 4, 5 here. So we're looking. This is how the ASX is finished, of course. So we're looking for an A wave, a B wave, and a C wave up here. It may not get all the way up there. That's the thing. The question to ask is that's 1, 2, 3, 4, 5. That's already the A wave, you know. So unless this is just wave 1, 2, 3, 4, 5, and then the A, B, C, and then that. So it's either this is the A wave, the B wave coming into play, and then the C wave just coming up here and not reaching there. Or we're going to look at this as 1, 2, 3, 4, 5 up here higher. So that's the question. It's one of the questions. I think we're better off playing this. So this to this, that's 5 waves here. I can see it clearly as 1 and 2, and nice strong third wave, fourth wave here, and then 1 and 2, and a little bit buzzy up here, but it's there. So this can come back into this space before going up, and sometimes there's a correlation sort of could be pretty rough, so don't take it too much to heart. So we may only get to there. And that also needs to be brought back a peg to the A wave, B wave, and C wave there. I mean, it could reach up there. So we've either got this as the A, the B, I'm going to bring that back down to here, to the C wave, or this is actually, you know, wave 1 and 2 and 3 and 4 and 5 coming up there, then the A, B, C coming back. Either way, we've got to start from the ground up, I guess. So whatever happens, if the 72 here becomes the retested resistance, you need to be on the short side at that point. If Friday closes weak, then Monday's going to close weak, and then we're going to see some profit taking coming in on Tuesday morning, and then the trend resuming in Tuesday afternoon, and then Wednesday and Thursday going to be swing days. So we need to kind of accommodate those. So any shorting, really, any risk that you want to take is really up into this space. So the other point here, let's just say that's correct, that it only goes up to there. Then the next move down here is going to be in 5 waves. And if it does go down here, back to here, it's going to bounce. If the point being, if it does come down through here, you're going to see another bounce at this point, you know, which will leave us with the opportunity to get under that wave B there as well. Or also what you could do is that wherever that is up there, just find the 50-60% and look to short in that zone there as well. So we'll just turn that green. So even though we may not get it going up here, when it comes back down and bounces, we can get it over this side as well. So you know, there's many roads to Rome, so we can get that. And the other thing to do is to just, sorry we're spending so much time on this, but between these are minor levels, all part of group 1. So we know we've got 1, 2 and 3 for group 1, then 5 for the midpoint, and then we got 8 here. And then if we got 8, we look at the 65 and the 72 in there. So it may just come to that 72 there. So if that's the case, then we can use that area to short as well. If it goes above the 72 into, you know, I'll say above the 80, and then it comes back down, and if it goes up into this space and you don't get clicked in for whatever reasons, then the 72 here is where you need to be looking. If that becomes the retested resistance, you need to be short, and if that becomes the retested resistance, needs to be short. And the initial stop, let's just say that the market gets up here somewhere, the initial stop would be if we use a classic trading levels pattern. So we've got the first high above the level, let's just say that we're wrong, and then there may be a second high here. So if you go shorting here, you just, because you'll be sort of at the markets anyway, you'll be looking at, you can just wait for that first high to come in. So don't go getting out just because it breaks up through there. You want to wait for it to become, the first high above the level, and then you can bring it down to this one over here for that, and then work it down that way. But be careful about doing that. But that's where the first stop can go. But the idea is, and if this comes up here and you don't get clicked in here, or something doesn't work out for you, then the midpoint is the other one too. When this comes down through here, it's the midpoint here, when that becomes the retested resistance at that point. So you might want to sell it in here. So there's a lot of things that you can do. It's going to be a little bit tricky, because normally look, if that's wave 1 and 2, then the next one up's going to be wave 3. When it pulls back, you think that, shit, that's it, it's done. But it's only the third wave, and then it pushes up for the fifth wave, and then it's going to come back for the ABC pattern here, and then go up again here. Do you know what I mean? So you need to be a little bit sort of careful about that. Also, too, we're going to move on and have a look at CBA. Yesterday we got out of CBA. Today we're going to get back in. Okay, so we want to get back in. We want to get under the 100. We've already mentioned that before. If this low is breached, then you might want to add to the position under the 2. If the 2 becomes the retested resistance at that point. I don't know what this count is here. But in one way or another, we'll be looking at putting wave 2 somewhere, wherever that top is going to be, and then we'll need to add to this. I'm sorry about we're getting out, but better to be safe than sorry. But now we need to get back in, and we'll be looking for this third wave down, which is the one, as Elliott traders, is the one that we want. And it'll probably be a bit tough getting through here. It'll be something like this, and be bouncing around here for a while, and then it'll go down, and it'll retest that. So there's, it's going to be a bit of a hassle there. Okay, let's move on to the resources. So, Jeffrey sent through this chart here, which I've had before in my list over here, but I've never used it. It's iron ore in the US dollars, and it doesn't do a lot of volume, but this is a monthly chart, and I'm not sure about what this means. I can see the word China there. So this particular high here and this particular low here, that matches up with that high and that low. Okay, so, and then this move up here is this move here, and I'm thinking that I need to get some information on COMEX about it, but this is a monthly chart. So when I go into the daily chart for this here, we can start to see the chart looks like this. So as an Elliott person, it's not really the best thing to use. So what they're doing here, it's a little bit like the London metals market, where they have, not quite in the fixed market, they have they have the mornings, they do 2 prices in the morning and 2 prices in the afternoon. And that's how the Japanese markets work where I first started. The Bashi dry cocoon and soybeans and red beans, that have 2 fixes in the morning, 2 price fixes in the morning and 2 fixes in the afternoon. And that was it. But I can see here that each one of these is just one day. So they're doing some sort of price fix on that day, So I think because the word China's in here, I think they're looking at the China market and calculating the yuan into US dollars, and this is a US dollar price pattern here. So I will double check that, and seeing that fast move down here has sort of haunted me a little bit. So I will need to go back over this move here and check on that to see that it's not 5 waves down. I've always known that the 50-60% retracement level over here is where this market can fail, and I don't think that we're going to fail from it just yet, because this little move here is corrective, unless it's 1, 2, 3, 4 and 5 up there. And also here, but I still don't get 5 waves up there. I mean, you could go 1 and 2 here, but this move on wave 2 here is actually lower than this one here, so I didn't use that. So really I need to put that there and look at that as 1 and 2 and 1 and 2 here. So yeah, a little bit perplexed here, but I'm still holding the faith that we've got further to move up at that point. So yeah, so that's sort of that in a way, but it has sort of made me think about things a little bit further. I was looking at Rio here, and you know, from this low here, so basically you know, with BHP, this move up here, I can count it as 5 waves. So I was looking back for an ABC pattern here. Now, as long as this stays in this space here, then I'm okay with it. If it drops below the 40 here, then we've got an issue at that point. We've got a bearish picture. And pretty much the same with we normally look at Rio on the tick chart, but today we're going to look at it on the daily and the monthly. So this is the 50-60% retracement level here as well. So I'm okay to stay bullish in this market as long as it stays above 100. You know, long as if that 100 becomes the retested resistance, then we're going to be looking at a bearish market coming down here further, you know. But then it sort of got me thinking I better have a look at you know, the monthly chart for Rio, which I hadn't looked at for a long time. And in this case here, I'm just going to dull that down a little bit. So yeah, so on the bearish side here, I mean, I could squeeze 5 waves out of this move up here, and then I was looking before as an A and a B and a C here, but I'm sort of counting 5 waves up in that move there. But this was my old count here, so I thought that was sort of interesting. And the reason that I've got this is an A wave over here and a big B and a wave here and a B wave here with an A, B and C wave here. The reason I had that as the C wave here is because I never got 5 waves down here, because if this was going to be an A wave here and then a B wave and a C wave down here, then I should have 5 waves down here, and I've only got 3 waves down here. So I have to look at it as an A and a B wave. And if I'm looking at it as a B wave, then I'll need to look at that as a C wave. I could go a WXY, I guess, as well for that. So you can see kind of here that we've got a bit of a classic trading levels pattern here as well. So we've got the arrival here, the reaction, the arrival, the reaction, the first high above the level, and you can see that we got 5 waves in that move there. So it's possible that we'll get the A wave, the B wave and the C wave down here. So this was the alternative count here. We've either got 1, 2, 3, 4, 5 to come down here, or we've got an A and a B and a C to this point here. So I'll do some more work on this. I'll need to, and thanks Jeffrey for bringing that back up. It made me look at the bigger picture again and look at this sort of haunting view that it could be bearish at this point. Yeah, so it means I'll need to double check copper, and also too we're looking at gold. So gold will be coming down further, so even if you don't trade gold, it's probably worth having a look at this particular picture that I'm going to bring out next, because it's, you know, they're all part of the metals market kind of feast. Yeah, with Rio, I won't probably go into a lot of this today. We did speak about FMG, and I'm looking at this as a bullish picture, but as long as it stays above this level here, you know, this, I know this doesn't count very nicely up here as wave 1 here. It counts better up as 3 waves to that high there. This does appear to be corrective here. There looks like there's 1, 2, 3, 4, 5 here, an A wave and a B wave. Not a very nice C wave here. So there's issues with all of this, but as long as it sticks to the 20 here for a while, I'm kind of okay with it. So I'll just stick with this for a little while. I can see that this could be wave 1 up here with wave 2 going back. So we'll just see. I mean, it's sitting at the 20. We don't need to make any decisions yet. If we make new highs, well, then we'll be going higher in that case. So I just wanted to move through. So then I come to gold here. So I was looking yesterday at an A wave and a B wave. I had trouble, as I mentioned to you, to get 5 waves up into this move here. But anyway, what happened is that, you know, started to push up, and I thought, all right, okay, we'll get, yesterday when we spoke, we're looking for wave 3, 4 and 5. That's all played out, and then this has moved down here. It hasn't moved down in 3 waves like I wanted it to. It still could, but I don't think it's the case. We've got 5 waves here, so that means that after a correction here, we're going to get another 5 waves down, which brings us down a little bit low at that point. It's not totally over, but it's just not looking good at that point, because that's already at the 61.8%, and we've got a straight line down here, which is going to be an impulse wave. So it's not all over just yet, but if we do come down further here, then I have to count this as corrective here, and then it takes it away from this being a low in place here. Okay, so we do have an issue at this point, which brings me back to, if we go back to the weekly chart here, and this is the count that we've been looking at now, basically, and then we've also been looking at with 1 and 2 and 3, you know, going up there, and that's fine, it's all good. But as I mentioned, we were tracking 5 waves down here, and I've counted the 5 waves down, but now we're getting you know, it's just not looking, something's not right here at this point. Okay, so that sort of makes me go back, and we're looking at another chart that had this in as the B wave up here. Do you remember that? So we're going to go back and have a look at that. So I've made adjustments to that chart, this chart here, and I think that we're going to be, I think that the triangle pattern may not be over, if that's the B wave here, because we either go an A and a B and a C wave down to here, and then we move up. That's one way to look at it, and that's pretty devastating. The other way to look at it is that this was a market maker low here, so really the low really needs to be taken sort of across here somewhere. Yeah, so this would need to come down further here at least, and then the D wave, and then the E wave here, and then a move up from that point. So it changes it a lot at this stage, you know. And then just to drill in on that a little bit further, because it means people that are holding gold long will need to exit, you know, or make some provisions to do something, you know. So basically, in a nutshell, what I thought was the low over here is possible, but like I say, having that 5 waves down here has been a bit of a game changer, because it's a bit like the US stocks that have come down, you know. So we're going to see 2, you know, it doesn't really, if it goes past this low here, then I have to bring it right down here. I have to bring it down for 3, 4 and 5 coming down here just for the C wave. And then if it's only going to come that far down, if I look at that as wave 1 here, well then, you know, the distance of this here, so if I just I'm just being very practical at this point, so just in terms of equality, that brings it down to this point. Now we could add another 60% to that too, because that's what a third wave does in that case, you know. So I could add that 60% to this here just for the third wave here, which would bring this third wave down to here. So anyway, I need to sort of figure that out a little bit, but this little tiny move down here as 5 waves has put a spanner in the works, and will negate this situation. So this is kind of what we're looking for here now. So we could end up back down, you know, I don't know, 1750, 1650, somewhere in this space down here. That's the that's the problem with this. So there's a lot riding on this over the next few sessions. So if we do break that low down here, that low, then we'll be looking at this situation. So you know, I've got some gold shares in Newcrest mining, so I'm going to be looking to take them out. I'm not going to ride this out here. So when it comes to GDX, so we're also doing the same as well. We're looking for up for 1 and back for 2, but that's not going to be the case either. So this is a weekly chart here. So yeah, I mean, in a nutshell, we had this as wave 2 over here, but that's not going to be the case. So we're going to have to look at this here as the A wave here, the A, the B, and the C wave up here, and then look for 5 waves down. So for GDX, we'll be looking back down between 28 and 25, I'd imagine. Yeah, I know it's a real, I mean, I've got money in gold myself, so I know what you're sort of feeling at this particular point. So, look, it could be counted a bit differently. I could do some WXY down here, but it's still not going to change anything. And the situation is, as I've mentioned before, is that we've got 5 waves down here, so we need to come down again, you know. But I you know, if that's going to be if that's going to be an A wave, and even if I had it as an AB, if I had this down as the ABC pattern here, and the market just took down, you know, if this wave C was just only 60% of wave A here, that still brings us down right down into this point here. So I think that we're going to be, so it's a bit difficult to call it wave 2 at that point. So this is where we're going to be. So this is the situation. So this is just going to flatline here like it is on the on the sort of other charts. But yeah, and Newcrest is going to be the same as well. So I need to reconfigure this in some particular way. But it's going to end up down here somewhere. So you know, I've got, as I mentioned, I've got stuff in here. I can't remember what prices, but all the way through here somewhere in this big block here. So I'm going to remove them here, and I'd need to be proven otherwise before I move back in. You know, if you're, I know some folks have got, you know, gold, you know, some big positions in gold. In the CFD market or futures market, then, you know, if you wanted to hold those, you either got a hedge or you know, look to short short GDX or something of that nature. Okay, so anyway, that's the sad news. And then coming over to the Australian dollar. So it's following the S&P 500 back again, so we'll just look to go lower here again. So we're just looking for, in a nutshell, so basically 1, 2, 3 and 4 and 5 coming down here somewhere for this, for the Australian dollar. So we've got wave 1 in. It looks like it wants to come down a little bit further. It looks like we've got sort of 1 and 2 and 3 and 4 and 5 to come in here. That's why I've got the 2 1s here. But otherwise, I think it will just follow this based on this one here on the S&P here. We'll just see something like this, and then down again. So you need to find a way in for all of this. So, you know, I was going to draw a line across here, but if it goes down to here and then goes back up here, it's going to cause a problem. So we need to find a way in this space up here. That's the 50-60% retracement level. It's quite a long way from where this is at the moment. So I think if we bring this down a little bit and sort of start to think that we need to be up here, so we need to look at this leg here for this. You know, the main between 71 and 72, the 75, the 50 here, the midpoint 71.50 is really I think where this market is going to sort of get to and struggle around that area and then move down from that point. So we're seeing the bounce at the moment. The bounce wasn't clean off this number, the 71 here. It's sunk into it, so it tells me that it's going to struggle to go up. Now it's got its first little 5 waves in there at the moment. So on the, it's still sort of pushing up there for that at the moment, which is good. So but it could probably be done at that point, and if it comes back to have an ABC pattern, so it may only get to there. Now if I look at this as the A wave, the B wave and the C wave coming up to that space based on the length of that to that point. So yeah, so I mean, the other point here is I was sort of thinking in some cases in this move here, that could also be wave 1 and 2 and 3 and 4 and 5 coming up into here. This is the other side of the situation. And then having an ABC pattern and then having another 5 waves up to go to the 61.8%. and then drop from that point. So it's kind of there. These are the two situations that are going to do it. So you need to find out a way to be able to sort of hold through all of that. All I can sort of suggest is that that the stop loss, if we play it this way, the first classic trading levels pattern here, the first high above the level, that's where the stop could go. In the all of where we put the trades in here. So if you think about it like that, obviously it means you need to put less money into this space here, but in the bigger picture of things, we can definitely go, once this moves up here, which it is, it means we can short under the 71 here. But any trades put in this space here would need the stop to be put up at that point. So then you can start to think, well, there's 10 points between 71 and 72. So if I'm trading 3 contracts, for example, then we know that the 15 is a likely space to hit. So we can go 15. 15, 16 or 18 is definitely one. I don't know if it will get that high up there. So 1650, 16, past it, 1650, because that's the lower end of group 2. So we could turn this, we could turn these green here and just basically put one order. It doesn't really matter what the pattern is telling us, but just basically putting an order here, here and here and putting the stop there. That way you'd be spreading it out a little bit. And if the market does this 1, 2, 3, 4, 5 ABC and come up to here, then it's just something you've got to ride out. If it does this thing here and struggles to meet here and starts to come down, well then, as I mentioned, you need to be on it over here. That's about what all's going to happen at that point. Or yeah, so yeah, so that's what we'll do, shall we? We'll just do that. We'll see how we go from that point. We're going to put one contract at each of these, and we're going to put the stop up there. Alrighty, I'll leave it at that. If you've got a better idea, that's all good too. But it's just the fact that, you know, I won't be there to count it out and to do it, you know, spot on for you. So it's a bit of a tricky one. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.